welcome to another video. In this video, I'm going to be going over change in state of delivery, okay? Now, change in state of delivery is simply an order block and a fair value gap before price displaces or runs away. That's really all it is, okay? Very, very simple, okay? Just think of an order block, if you know what an order block is, and a fair value gap. That's literally all it is. So this video will probably be very, very short for that reason. So let me show you what a change in state of delivery will be, okay? So you see how we have this little consolidation here, and then we have this big big displacement move down, or bearish displacement, whatever you want to call it. If we zoom in here, you could probably see an order block right here, and you see fair value gap. That's a change in state of delivery. Okay. Now, how do you know if it's a valid change in state of delivery? You use other confluences. You can use the core confluences video from the Trifecta's Arcana, because that video doesn't just go for the eudaimonia trifecta. It also goes for a lot of other things, because those confluences there are my core or main confluences. Even these here, SMT, new week opening gaps, AMD, low resistance liquidity. You just use any confluences you would like to use, or I can make a separate video, which I probably will in the future. I can make a separate video on core confluences in general to help you use with everything that's around ICT concepts itself. So I can probably have like a set of 10 core confluences in a video and provide it to you so you can know how to predict if a change state delivery is wrong, how to predict if a breaker structure may be correct or incorrect, or just how to predict price in general. But in order to predict or to see if a change state delivery will work or not, you have to use other confluences. You just have to. A change state of delivery will not work without other confluences. It's just not. It's just not going to work. Because an order block and a fair value gap can form all the time, right? You just have to think. Think of the bandwidth of the, I think that's the word, the bandwidth of the formation, okay? You have to think, if a order block and a fair value gap can form all the time together, don't you think sometimes it can be invalid? But if there's a unicorn that doesn't form all the time, don't you think it's gonna work? Of course, because it's a unicorn. It doesn't form all the time. But if fair value gaps form every single day, every single minute, every single second, don't you think it's gonna have some sort of like violence against it, or it's gonna get violated? Like that concept is going to get violated day by day, hour by hour, minute by minute, second by second. But with the change state delivery, it's the same thing. An order block with the fair value gap can form anywhere in any time frame, like anywhere, at any time, anywhere. Okay, so that's the bandwidth of it. So you have to use other confluences to make sure that formation of a change state delivery is correct. Okay, but enough of me yapping. I hope I gave you pretty good understanding or rundown on that. But a change state delivery would be here. You see, you have your order block, which is these two consecutive up close candles. Remember, an order block is never one candle. Please understand that. An order block is never one candle. Please understand that. If an order block is one candle, that's not an order block. If you say an order block is one candle, that's not an order block. That's a mitigation. That's a failed order block. Okay? Or a failed creation of an order block. A failed order block would be a breaker block. A failed order block is a breaker block, and a failed creation of an order block is a mitigation, which I think mitigation is stronger than breaker block. Yes, a mitigation is stronger than breaker block. But anyways, enough for me yapping. So you see how we have these two up close candles signaling a order block creation? Yep, the order block got created. Now, there's fair value gaps here. There's one. There's one. There's just one. There's just one. So if you see this, right? If you see an order block and you see a fair value gap, that's good, okay? But sometimes the fair value gap will be created right outside the order block. So it'll be like somewhere like around here, something like this. The order block can be, or the fair value gap can be right here, while the order block is right here. That's, you can take that, you can. If like the order block's already been touched into or already been tapped, and then you see an order block that can get, not order block, but a fair value gap that can get tapped later, then you could take that fair value gap, but just be sure to use other confluences. But like you see here, if you see a order block, but the fair value gap is inside of the order block, that supercharges the change of state of delivery. That just supercharges the order block. So you can confidently take this using other confluences, of course, because just because you see a fair value gap within a change of state of delivery or within an order block doesn't mean you should take it. because like I said, the bandwidth of this forming is very high. So these can get violated on a daily basis, minute basis, second basis, hourly basis, or weekly basis. It doesn't matter because the bandwidth of this forming is very high. So you have to use other confluences to make sure it doesn't get violated, okay? That's just common sense. Well, probably not common sense, but that's something I thought of over the years of trading ICT, is that the bandwidth of a formation. You have to think of the bandwidth, okay? That's why I don't use inversion fair value gaps much, because they form all the time and they can easily get violated. That's why you have to use other confluences with inversion fair value gaps or stuff that forms a lot to have a good model or a good entry model. If you guys know about Doggy D's official on Instagram, he uses inversion fair value gaps, but he also uses other confluences to confirm that inversion is going to work out well. Same thing with change of state delivery, okay? But enough of me talking about the violation, the bandwidth of a change of state delivery, and let's actually get into it. Like the order block here, fair value gap, it comes up, touches it, and sells off. Pretty well, right? Now, know that we haven't included any other confluences. We haven't used anything else. Nothing. Literally nothing. Haven't used any other confluences. Okay, keep that in mind. We haven't used any other confluences, okay? Now, let's just include other confluences. All right, let's just include it. Why not? So, right here, right, we see how we have this break of structure right here. Price came down, broke structure of this swing low. Wherever swing low is, right there. So that's the swing low. Wish I can set that on the bottom. On the bottom, on the left side. There you go, swing low, okay? Price comes down, breaks it, returns to this fair value gap that's right in between this order block here, which is another change of state of delivery since we're including other confluences. And you see how the change of state of delivery is forming a lot, or the order block and fair value gap is forming a lot. That's the bandwidth I was talking about. That's why you have to use other confluences to make sure that change in state of delivery does not fail on you, okay? Because there's one here, there's one here, and then look, there's even another here. Look at that, another one there. So they form a lot. They form a pretty good amount. And it even forms here, right in this area. But look, see how it got ran through? It's because the bandwidth is so high. The bandwidth of this forming is very, very high. So you see how this one here got ran through and then dropped afterwards? Yeah, that's what I'm talking about. So one formed here, another formed here. They form everywhere. Okay, so that's why you have to use the confluences. But enough of me talking. And let's actually get to the confluence applying. So you have this break of structure. Price came to this fair value gap within the break of structure. So you'll be expecting some selling pressure. Okay, right here, this fair value gap. And then we had a turtle soup of this high here, which is a liquidity purge. So we had a quick liquidity purge of that high. So we had a break of structure with the liquidity purge, but the retracement before the break of structure came to this imbalance or this change of state of delivery fair value gap here. We came and retested this. So it's fair value gap retest, or a change of state of delivery retest following a break of structure with a internal range turtle soup with a change of state of delivery confluence of the turtle soup. Simple, right? Very simple. But that's just us applying confluences. I'm not applying a lot. I'm just applying. How many did I apply? 1, 2, and 3. Just 3. Just 3. Okay. 3 is really all you need. 2, well, maybe not enough, but 2, 3 is definitely enough. Okay. So anyways, let's look to the next one here, which is right here. You see how we have these two upload candles, which is a bearish order block with this fair value gap within it, supercharging the change of state of delivery. Let's go ahead and mark these levels out. Fair value gap. Then we have this order block here. Oh, a bit too long. Uh-oh. Pull this in. And there's our change of state of delivery. Now, yes, it worked out, okay? Because it was a supercharging confluence, because the fair value gap was within the order block. But what were the confluences? What were the confluences behind this? Okay, so let's first mark this out. We got low resistance liquidity here, indicating that this can get ran through very easily, okay? Low resistance, okay? Now, we have two confluences here. We have a break of structure and a change of state of delivery in the same thing, in the same area, okay? So there's CISD and BOS, or change of state of delivery and break of structure within the same area right here, okay? And then as you see, when we came and ran through those highs, we started to kind of close below. You see how we ran this high? Close below it. You see how I tried to come up again? Close below it. And then we finally had to run through and an immediate rejection off, creating an order block and a fair value gap. That's your entry right there. When price comes up to the fair value gap, that's your entry. You want to use the fair value gap as your entry, okay? if you're using this CISD or change in state of delivery as an entry, you want to use the fair value gap always. You never want to use order block, because the order block by itself without a fair value gap is nothing. Okay, because order blocks form every single day, every single minute, every single hour, every single second, so they can get ran through very easily. But if there's a fair value gap in order block, it forms a lot, but it doesn't form as much as just a single order block. Because an order block can form on a second chart, an order block can form on a 1 minute chart, it can form literally anywhere. Okay, so the bandwidth of an order block itself is high, and even a fair value gap plus order block is still high. But just using low resistance liquidity, I'm sure there's probably a SMT here on silver. You're supposed to use silver with gold as an SMT, but I'm sure there was a confluence here signaling another bearish indication. But let's go to the next example, shall we? Another example. Wait, if I can find one real quick. Yep, right here. Wow, look at that. Perfect. This is not going to be edited either. This is not going to be edited. So we have these two consecutive down close candles here, which is our bullish order block. There's our bullish order block, okay? And then look at that. Fair value gap within the order block. Supercharge. Oh, whoa. How'd I do that? But this is our fair value gap within the order block. Supercharging the order block, creating a change in state of delivery. All right? And then you see when this is created, price immediately has a run up, okay? Before this was created, okay, we didn't have a major run up. But once this was created, the volatility kicked in, okay? Now, we're not even using any confluences here, are we? Okay? So let's include that. So we got this here, which is what? Which would be low resistance liquidity, sell side low resistance, okay? If you pull this out right here, that's sell side low resistance. And then if we look at the candle closures, when we came and ran that low, we had a turtle soup here. Because when we came below it, we kind of closed above it. And every time we came below it, we had some like willingness to go higher. You see with the wicks here, how the bodies are telling us we want to go higher. Every time we come below this level, we either close above it or close close to it. That's another indication. So we have this bullish candle closure here indicating we want to go higher. After this, we had to change the state of delivery. Once it was formed, you could have took this fair value gap here. And this mitigation block was also signaling bullish order flow here. Wow, very close. Look at that. Very close to hitting it. That's amazing. Very close to hitting that mitigation. But if that mitigation would have got hit, that was just like a little protection barrier to confirm that price was going to go higher. So this would be a change in state of delivery using low resistance liquidity and a mitigation block to confirm. Simple, right? Very, very simple. You see this order block here? You see how this order block got ran through? That's what I'm telling you, the bandwidth. The bandwidth is so high that order blocks can be ran through any day, any minute, any hour, any second, any microsecond, any time of the day, any week, any month. They can get ran through because they form all the time, okay? But I think that's enough for this video. I hope I gave you a pretty good rundown of change of state deliveries and how to actually use them and predict them correctly, or just a general rundown of change of state deliveries in general. But enough of me talking. This video is like at least 12 minutes long. I need to go do some things. I got other videos to record. I got other stuff I got to manage. And I'm sure you have the same thing, but I'm younger, so I don't have, the finances like you do. But anyways, enough of me actually talking. This video's been going on for about like 12 minutes now. I got to end this here. I'll see you guys later. Peace.